You made an extra $10,000 last year from your side hustle. You celebrated, you spent it, and right now the IRS is calculating a bill that could wipe out every dollar of that profit, and then some. Most side hustlers treat their extra income like a bonus. The government treats it like a business. And if you don't know the rules of that game, you're not earning extra cash. You're walking into a tax trap. In this video, we're breaking down the 3% hidden tax you didn't know you owed, the quarterly trap that triggers IRS penalties before you even file, and the one mistake that turns your side hustle from a moneymaker into a financial nightmare. Here's how taxes work when you have a normal job. Your employer takes money out of every paycheck. Federal income tax, state tax, Social Security, Medicare. You never see it. You never touch it. By the time your direct deposit hits, the government has already been paid. You file a return in April, maybe you get a refund, and the whole thing feels painless. That system has worked for decades because it was built around one assumption: you work for somebody else, and that somebody else handles the math. Now think about what happened over the last 10 years. Uber, DoorDash, Etsy, Fiverr, Upwork, Amazon, FBA, Airbnb. An entire economy exploded where millions of people earn money and nobody withholds a single cent. The deposit hits your Cash App or your PayPal looking like pure profit. No taxes taken out, no pay stub, no employer doing the work for you. And that feels amazing. You check your balance, you see the number growing, and you think you're getting ahead. But here's what nobody tells you when you start. That number is a lie, because a chunk of that money was never yours. Once you see how the IRS actually treats your side income, you'll understand why April destroys so many people who thought they were building something. When you work a regular W-2 job, your paycheck has a hidden shield most people never think about. Your employer pays half of your Social Security and Medicare taxes. 65%. You pay the other half. It's invisible. It's automatic. You never feel it. The moment you earn money from a side hustle, that shield disappears, because now you're both the boss and the worker. There is no employer paying the other half. You owe the full 3% self-employment tax on top of your regular income tax. Let's put actual numbers on this. Say you earned $12,000 from your side hustle last year. Before you even think about income tax, you owe nearly $1,700 in self-employment tax alone. Add federal income tax at your bracket, 12%, 22%, whatever it is, and that $12,000 could easily cost you $3,000 or more on $12,000. And here's the detail that shocks most people. This tax kicks in at just $400 in profit, not $400 a month. $400 total. You could sell a few things on Facebook Marketplace, do a handful of freelance gigs, drive Uber for a couple weekends, and you've already crossed the line. If you're renting right now, or living paycheck to paycheck, and your side hustle was supposed to give you breathing room, this next part is going to make you rethink everything about how you manage that money. Most people are used to paying taxes once a year, file in April, settle up, move on. But the IRS doesn't work that way when you're self-employed, not even as a side hustler. If you expect to owe more than $1,000 in taxes for the year, you're required to make estimated quarterly payments. 4 deadlines spread across the year: April, June, September, and January. Miss any of them, and you don't just owe what you owed, you owe underpayment penalties that compound over time. And here's what makes this truly brutal. The penalties apply even if you pay everything in full on April 15th. The infraction isn't owing money, it's owing money late. The IRS wanted it in 4 installments throughout the year, and because you didn't know that, you now owe extra. Think about what this creates. You're a freelancer or a gig worker. You don't have a consistent income month to month. Some months are great, some months are dead. And the government expects you to predict your annual earnings, calculate your own tax liability, and mail a check 4 times a year, with no guidance, no reminders, and penalties if you get it wrong. It's a cycle where you're always robbing your future self to pay the previous quarter's bill. And most people don't even know this system exists until they get a letter from the IRS telling them what they already owe. But here's where it gets truly dangerous. Because even if you learn the quarterly system and start paying on time, there's a classification trap that can make everything worse. Platforms like Etsy, eBay, PayPal, and Airbnb are now required to report your earnings directly to the IRS through 1099-K forms. The old threshold was $20,000 and 200 transactions. The new threshold is $600 total. That means the IRS now has a digital paper trail for virtually every side hustler in America. And here's where the real trap springs. When you file your taxes, you're allowed to deduct business expenses, home office, equipment, mileage, software. These deductions can dramatically lower your tax bill. But if you claim losses, if your deductions exceed your income, the IRS might reclassify your side hustle as a hobby. And that reclassification is devastating. If the IRS says your side hustle is a hobby, you still have to report 100% of the income. But you lose the ability to deduct your expenses. Every dollar you earned is taxable, and every dollar you spent is irrelevant. A year that looked profitable on paper becomes a net loss after taxes. If you want to understand how government tracking of money flows works on a much larger scale, and why some countries deliberately manipulate their own currencies, I break that down in my video on the global currency game. Link in the description. The hobby reclassification is the IRS's way of saying, if you're not running this like a real business, we're not going to let you take business deductions. And most side hustlers have no idea this line even exists until they've already crossed it. So what does all of this actually mean for you? Let's say you're working a 9-to-5 making $50,000 a year. You start a side hustle, maybe freelance design, maybe reselling, maybe content creation. You pull in an extra $15,000. You feel like you're finally getting ahead. You spend the money. You don't set anything aside for taxes. You don't make quarterly payments. You claim some deductions, but you didn't keep great records. April comes. Your tax software tells you that you owe $4,500. You don't have it. You go on a payment plan. Interest accrues. And now the thing that was supposed to give you financial freedom is the thing keeping you up at night. And here's the objection you'll hear. Well, that's your fault. You should have known. But think about that for a second. When you started your W-2 job, did anyone hand you a blank tax form and say, figure it out? No, the system did it for you. Withholding is automatic. Compliance is built in. But the moment you earn $1 outside that system, every safety net disappears, and suddenly it's your problem, with penalties if you get it wrong. The side hustle economy generates over $1 trillion a year. The tax infrastructure supporting it is a paper worksheet and a penalty system that punishes people for not knowing rules they were never taught. That's not a knowledge gap. That's a system designed for a workforce that doesn't exist anymore. Here's how you disarm it. Open a separate savings account and move 30% of every payment into it the moment it hits. That money was never yours to begin with. Stop using shoeboxes for receipts. Use QuickBooks, Xero, or even a spreadsheet, because those records are the only thing that protects your deductions in an audit. And if you still have a W-2 job, you can increase your withholding there to cover your side hustle taxes. No quarterly filings required. Side hustles are the best way to build wealth in the 21st century, but only if you're the one in control. Don't let a year of hard work disappear into penalties and interest. If this changed how you think about your side income, subscribe.